Welcome to Emphasis Added, a podcast by the Houston Law Review about legal issues, prominent lawyers, and the study and practice of law. I'm Matt Shelf.
And I'm Brock Jones. We're your hosts, and thanks for joining us. We're joined here today by Archie Fallon, the managing partner of Willkie, Farr, and Gallagher's Houston office, to discuss developing trends in the energy transition space as the world marches toward its 2050 goal of net zero carbon emissions. Archie serves as co-chair of Willkie's Project Finance and Power and Renewable Energy Practice Groups. He generally represents private equity funds and corporate clients in strategic energy and infrastructure transactions, including investments in assets such as midstream, power, renewables, and transportation. Archie is a frequent author and speaker on developments impacting the energy industry, having recently presented on investment risks for carbon capture projects and published on private equity energy deal security. Additionally, he serves as chair of the Renewable Practice Committee at the Institute for Energy Law and is an advisory board member of Houston's Renewable Energy Alliance. Archie, thanks for joining us today.
My pleasure. Thanks for having me.
So before we get into the substance here, I wanted to take the opportunity to address the new presence on our show today. Jake Guarino is an incoming 3L Houston Law Review podcast editor for Season 5 and will soon take over the reins with his co-host, Harrison Little. While Harrison will be introduced when co-hosting the following episode alongside Matt, I wanted to give Jake a brief moment here to introduce himself before we get the episode rolling.
Hi, I'm Jake Guarino. I am rising to 3L at U of H. Really excited to join the podcast here and, be a part of Emphasis Added. And this summer, I'll be working at Andrews Myers and Wilson Cribbs and Gorin, respectively. And I'm mostly interested in working in commercial real estate or commercial litigation.
Good deal. Thanks, Jake. So back to our esteemed guests. Congratulations, Archie, on your appointment last year as Willkie Houston's office managing partner.
Why, thank you. It's a phenomenal law firm, and honored to have a chance to help grow the office.
Good deal. So to start us off, we are curious about your involvement with the Renewable Energy Alliance of Houston. Can you tell us a bit about what Houston's Renewable Energy Alliance does and the scope of your work with them?
Sure, happy to. So Renewable Energy Alliance, we call it REAL for short, or REAL Houston, was really born during COVID. And there were a number of us who were associated with renewable energy businesses, either as advisors like lawyers or business professionals who had been meeting for some period of time before 2020 and had thought, it would really be great if this ecosystem of people could add some structure to it. Structure typically means a few different things. It means there are sponsors that are willing to make financial commitments to enable an organization to have more regular events, have people that are organizing the events for the organization and that are promoting the organization throughout the community. And so there's an individual named Michael Skelly who is one of the leaders of renewable energy thought, within the Houston community. He's also an energy project developer. And in a sense, REAL was a brainchild of his. Just a side note, there's a phenomenal book that's written about Michael Skelly and developing renewable energy projects and really just kind of energy projects in the U.S., and that's called Superpowered, and it's written by Russell Gold, who's an energy reporter for the Wall Street Journal. So would encourage the listeners to check that out if they're interested in renewable energy and what it's like to have the blood, sweat, and tears of developing an interstate transmission project over several years. But Michael Skelly, encouraged a number of people in this community to try to add some structure to the organization. And there were a couple of law firms, a couple of companies where the people were really energized about this idea. Willkie Farr was the first organization to actually make a financial commitment, which we're really proud to say. Sunnova, which is a developer of solar facilities and retail solar, was one of the original founding members. Pattern Energy, which is a global developer of renewable energy facilities and power facilities, was also a founding member, together with EDF, which is a gas and renewables utility that's global in nature, and they have Houston operations, California operations, and I think there might have been a few others, but those were really the key ingredients for the beginning of Real Houston. And over the first year or so, we were still in COVID, and we created a series of programs that were webinars that gave people information about what are renewable energy projects, what are financing strategies for them, what are the private equity interests in investing into renewable energy. There were certain emerging trends around hydrogen as a fuel source, carbon capture projects, and we assembled panels of people that were interested in talking about these topics. But in that environment, assembling people was as simple as setting up a Zoom call, right? And we received a response that was an exciting level of participation pretty early. I remember the hydrogen-focused session that we did towards the end of 2020. I think there were well over 100 people that were participating on the Zoom, and we were concerned that the Zoom account, wouldn't accommodate all the people that had joined. So there was something about this format that was attracting people in Houston. There were also people in New York that were involved in energy banking that were participating, and a lot of the early success was attributable to one of the leaders of the organization, who's also, I believe, a University of Houston law graduate. Her name's Kay McCall, and Kay has had a really interesting career. Starting out as a trial lawyer, moving in-house with some different energy companies, becoming a CEO of a wind energy company in the Northeast, and then basically, once that business was sold, she moved back to Houston, where her roots lie, and this was kind of a project she wanted to take on to become the executive chairperson of Real and promote it within the community. And so, from the end of 2020 through the end of 2021, it was really one of the main goals of the organization was to scale up and add more corporate sponsors, add more in-person type of events as COVID waned somewhat, and we were successful with that. There are now something like over 30 different corporate sponsors for Real, and a number of law firms. Locke Lord is a sponsor, Sidley Austin, Latham Watkins. And so, it's important for the organization to balance having too many service providers versus corporate members, because, part of the reason that the corporate members, well, let's take a step back. Part of the value that an organization like that offers to corporate members is networking potential, workforce development, and an opportunity for people within the organizations to have more branding within the community. So these companies are companies that are in growth mode. You hear sort of ebbs and flows within the economy, the energy economy of Houston. These are pretty much all companies that since 2020 have been hiring people and trying to scale up their workforces at the University of Houston and Rice and other places. And this organization gives them an opportunity to really showcase who they are within job fairs and internship programs and things of that nature. That's a huge value driver for the corporate sponsors of Real. And there's also a function of Real that's unique to Houston, which is there are people that are involved in the energy industry in Houston through the oil and gas business or maybe the conventional power business, who are developers. They could be engineers, they could be service providers, they could be attorneys, or people who are involved in land and real estate and title, and they develop skills working with conventional energy type projects, and those are really useful skills regardless of the kind of project that's being developed. It could be a coal-fired power plant, it could be oil and gas wells, it could be a large wind farm. You have to assess, who owns the real estate, right? Who has the title? How do you write a title policy that's valuable for a project to get financing? feeds into another topic, which is what is the role of attorneys in those kinds of projects, but we'll probably save that for a later part of the discussion. But REAL has provided a forum for people who are interested in transitioning their skills from whatever the kind of company is they're working at today, which could be conventional power, it could be oil and gas, it could be something else, to renewable energy companies. What are my job potentials for a company like that? If I'm an in-house lawyer, what are my opportunities like if I want to find an opportunity in-house at a renewable energy company? What are the kinds of skills that I need? What are the vocabulary words? If I'm having a conversation with people about electrons, that's a different conversation than about hydrocarbons, right? So like on about a quarterly basis, there are happy hours where people can get together and network and meet others that are either in working for renewable energy companies already or maybe looking to. And there's also a young professionals subset within REAL that we're trying to get off the ground that could be interesting for people that are early career professionals.
Very interesting. Thank you for that, Archie.
Sure.
So the term energy transition has become a pretty hot topic recently. However, the specific technologies and processes that are associated with that are likely unfamiliar to many people. How would you define energy transition?
Well, it's a great question. Energy transition has different meanings to different stakeholders. I think what it means at a high level to me is that energy sources that people are using are decarbonizing, and basically there's a lower CO2 content associated with the energy use of consumers. And those consumers can be industrial consumers. They can be people like you and me using energy. But the energy transition generally means production of lower carbon intensity fuels, and it means the infrastructure associated with transporting, storing, ultimately consuming these lower carbon energy sources. So, when you're talking about conventional renewables, it's funny that there's this idea of conventional renewables, but about 20 plus years there have been developers of solar generation facilities in the U.S., wind generation facilities. And so these kinds of projects are, in some geographies within the United States, being introduced and developed at a velocity that's different and greater than what has historically occurred. But in a sense, those are the traditional, conventional type of renewable energy projects. Energy transition projects, the kinds of examples that you're often hearing about are green hydrogen storage. There's a client we work with that has been involved in a green hydrogen storage project. And basically what that means is there's renewable energy that's either solar power or wind power that's used to energize what's called an electrolyzer unit, which splits water into oxygen and hydrogen, right? And so you store the hydrogen in some kind of storage containment facility. It could be underground, it could be above ground, but the key ingredient from a decarbonization perspective is that the energy that's utilized to energize that electrolyzer unit is solar or wind power. And then subsequently downstream, the green hydrogen can be utilized as a fuel source for vehicular transportation. It could be used in industrial processes. And so, you're creating a fuel source that might displace other, higher carbon intensity fuel sources that would otherwise be used if the green hydrogen wasn't available. That's one example. And another example you hear a lot about are carbon capture projects. And so those kinds of projects are in some cases derived from carbon injection processes and similar kinds of enhanced oil recovery projects that you might have read about in the past. The oil and gas industry has been using carbon dioxide to help stimulate and enhance production of oil and gas for many years. That's not a new kind of engineering strategy for oil and gas operations, but what's new is incentives for actually capturing carbon dioxide from some kind of industrial process and then actually sequestering it, putting it underground and, containing it within a unit and monitoring that containment for a long period of time. Those kinds of projects are, driven as mentioned by tax credits that are associated with the tons of CO2 that are stored underground and government subsidies for that storage activity. There are other kinds of energy transition type projects as well, in terms of electrical vehicles, different kinds of fuels that are produced from, they could be some kind of organic process, renewable type fuels, renewable diesel. These kinds of fuels can be made from wood pellets. They could be made from waste within landfills, waste from dairy farms or agricultural functions. So part of the role of the lawyer for clients that are engaged in energy transition projects is to understand the risks associated with what they're trying to do. As lawyers, we're counselors, and we try to help our clients understand the risks that might be in front of them. We help them try to understand whether they're being compensated to take risks or not. And in these kinds of projects, there are a lot of different stakeholders. There could be a landowner, there could be a lender, there could be a customer that's going to buy all of the production from one of these facilities for a long period of time. And with each of these relationships, there's typically a contract that we as transactional lawyers help negotiate. A key role for us as those contracts are negotiated is to identify what are the risks that something goes wrong, particularly with the construction project itself, but also after the construction project and once the facilities are operating, other kinds of events that could occur, like a hurricane interrupts the facility from operating. Who bears that risk? There's a winter event where everything freezes over like it did in Texas not too long ago. Who bears the risk of that happening? If the underlying company that's actually owning the facilities and producing the energy and receiving the revenue, if it goes bankrupt because it's borrowed too much money and the facility shuts down, what happens in that context? How is a lender protected that might have lent the money for the facility to be built in the first place? So the closer you are to the way the actual business operates and the facilities run and the way things can go wrong, the better you're able to advise the client on these kinds of risks.
So Archie, what trends have you been seeing recently in the private equity mergers and acquisitions and energy financing spaces regarding the energy transition?
Well, I think one issue that you run into with clients that are investing into businesses that are front end on technology risk and clients that are also investing into businesses where something has to be built versus an operating business, those kinds of clients want to be sure that they're not funding all of their money up front, and there are appropriate mechanisms for alignment between a project developer and a capital provider. And so let's say there's a budget for a project to be built over the course of 12 months, and there's a G&A budget for the people to receive salaries over the course of that 12 months and some kind of bonus structure as well. Capital provider doesn't necessarily want to fund the entire 12 months of construction budget and G&A budget in month one. They may want to create some milestones for when funding is going to occur over that course of time. And then also it's important to structure upside participation between key management individuals and the capital provider so that once the capital provider is receiving back a rate of return that it finds to be acceptable and there are profits that are available to distribute, the management that's taking a lot of risk with their time and their sweat equity, you hear it referred to as, are sharing in a substantial economic upside potential. Otherwise, it's difficult to incentivize these people who are often really talented and have alternatives to continue, perhaps working at a large corporation to leave that umbrella and to strike out on their own and become developers. And so, I think what you are seeing in the energy transition space is more people that are taking those risks. They're leaving larger companies and trying to secure independent capital and develop projects, which leads to those kinds of upside participation arrangements that I mentioned. You also see larger companies that are leaning into energy transition and making more investments that are what are called growth equity type investments. These are investments in earlier stage businesses that may not be positive cash flow type businesses. And so these are technologies that they want exposure to. The existing businesses can leverage their knowledge and all the engineers that work at those places. They don't want to be left behind. They want to be leading the way and capturing some of these opportunities. It's interesting to follow the people. Where do the people go? Are they staying at larger energy companies? Are they starting up their own businesses? What's really fascinating about Houston is there's so much human talent here that works within the energy business, and where people work within Houston is a proxy for where energy talent moves, I think, across the U.S. and globally. So, there's a fair amount of this trend that's occurring that's similar to what happened in the oil and gas business at the advent of the shale boom around 2011, 2012, 2013. There were engineers that had been within larger oil companies for a long period of time. They had understood some of the concepts around, shale development and hydrofracking, and those people struck out on their own and left those larger companies and started working with private equity to develop the opportunities that those companies that are larger didn't feel were appropriate to focus on. So there's a repeat story that's occurring here. It's really the same story over again. What's not unique is that a lot of it's happening in Houston. These are people that are supremely talented, from an engineering standpoint or project management standpoint. And so it leads to a lot of investment transactions for capital providers. It leads to, once these projects are developed, M&A, where the projects are sold to larger companies that didn't want to take the risk perhaps on the front end of the development cycle. And so it's a really busy time for transactional lawyers that are in this niche.
So in December of 2021, President Biden announced a bold new objective of a 50 to 52% reduction from 2005 levels in U.S. economy-wide net greenhouse gas pollution in 2030. For perspective, the U.S.'s 2022 net greenhouse gas pollution was about 14% below 2005 levels. Still, in August of 2022, Congress pushed toward achieving the Biden administration's goal by passing the Inflation Reduction Act, or IRA, designed to incentivize investment in the clean energy industry. The IRA represents the U.S. government's largest ever investment in renewable energy, setting aside $369 billion for its development. What incentives does the IRA provide for institutional investors or companies seeking to engage in the renewable energy space?
Well, there are some unique financing strategies that exist now that didn't exist before the IRA. The IRA has clarified that tax credits are available for a range of different energy transition projects. And so we talked earlier about, carbon capture projects. We've talked about green hydrogen projects. What the IRA does is it clarifies what are the parameters for certain credits to apply, and what doesn't apply as well. Now, there is a dynamic commenting process that's occurring. There are tax lawyers and accountants that are very busy with the IRS trying to drill down on some of those contours. But what it has basically said to the financing community is these are new classes of assets that should attract financing for tax credits. There's also new clarification under the IRA that partnerships can be formed in order for investors into the tax credits to receive those tax credits, which wasn't clear in certain of the projects beforehand. And then there's also the concept of immediate pay. So instead of different participants in tax credit regimes having to wait for deductions to tax bills over time, there are economic payments that the government makes in respect of credits that are available. So at a high level, I think there's clarification that's offered financial investors into renewables energy transition. There's an acceleration of incentives that exists. And, I think these are worthwhile on a more personal level, worthwhile policy objectives in order for the government to incentivize new kinds of technology adoption. This has been, a common strategy for the government, over a long period of time to incentivize different kinds of economic investments through tax policy. So I'm not a tax expert or tax lawyer, but for those of you that might have taken tax courses, you probably become familiar with those concepts that tax laws are often the way the government can shape how investments are made into different industries.
So despite the substantial amount of money that is flowing into this industry, it doesn't seem like the U.S. is really meeting its decarbonization commitments that it's made in the past. What are the specific regulatory issues hampering the U.S.'s progress?
There is this swell of complaints that exist with respect to project permitting, and that exists within a couple of different niches of project development. Power transmission on an interstate basis is, one of the most difficult kinds of project development because there are different stakeholders that exist at the state regulatory level that aren't unified or basically trumped through federal regulation. And so, interstate power transmission is a bottleneck that exists for building new renewable power generation. So having a more global, unifying, federal, preempting regulatory regime for that kind of development would be viewed, I think, by the renewable industry as really helpful. There are other environmental stakeholders that are important to navigate with. It can be oil and gas, it can be renewable energy. There are environmental nonprofits that have an important role that have to be considered, and so that's something that I think the industry is facing in the same way that other developers are facing as well. I think that there's also issues associated with landowners at again a local level. You can imagine if you're trying to develop a wind farm in a community, there might be benefits that are derived from that kind of project through construction jobs, but how many people really want a 40-story wind turbine in their backyard, right? It's not necessarily the case. People want that, even if it's a decarbonized source of energy. And so in a place like Texas, you have in certain parts of the state, landowners that own thousands of acres, right, on some kind of ranching property, for example. And so it's a lot easier for those kinds of landowners who, are paid some kind of, economic incentive for the development to take place on their land, and who aren't, necessarily living beside where the turbines are located, to support the development, not just on their property, but maybe on, adjacent properties as well. These are just issues around land use, and, land use can create, controversial opinions within a community because of the impact that it can have on people. In my own personal view, the federal government doesn't have a role in solving that problem. This is an issue that developers have to confront when they're entering a community, assessing, what's the level of support for a project in that community. But it is something that I think the renewable energy industry is confronting now, with the scale and the diversity of different projects, the velocity of new projects that we were talking about. These are new entrants into some states where maybe there hasn't been a lot of renewable energy development over time. You're seeing it in the offshore wind space, right? The off the shore of, Martha's Vineyard or some of these pristine tourist locations and vacation areas. How many of those landowners want there to be offshore wind production? Might affect boating activities, fishing activities, things like that. Again, on the Gulf Coast, there's always been, particularly in Texas, a lot less local opposition to industrial projects. There's just more of a history of them occurring. In that situation, it does become more of a federal issue because the relevant tracts where the offshore wind turbines would be developed are pursuant to federal leases. And so the federal government does have a role in trying to interface with the landowners on shore that might have community organizations that say not in my backyard. So that'll be an interesting conundrum for the federal government to deal with as basically a lessor of those projects.
So kind of aside from land use concerns, is there any concern surrounding this kind of one-track focus on net zero carbon emissions in terms of the cost associated to build out the necessary infrastructure?
Yeah, I think there's a cost issue. There are other issues associated with just there's been debate over reliability of renewable energy facilities in Texas. That's obviously been a political football over the past couple of years. I think what's really fascinating, if you kind of take a step back, is from a decarbonization perspective. When I started my legal career, I think something like over 50% of energy for power generation was from coal-fired power in the United States. And on a regional basis, it might have been much greater than that in certain regions. And just through the repowering of those places with natural gas, there's been a huge reduction in the amount of CO2 that's generated. So, if you kind of look at the actual amount of CO2 that's generated in the United States over that period of time, it's either, held steady or dropped somewhat. And that's really because of natural gas. It's also because there's an increasing amount of power in the U.S. Generated by renewable energy. I think I read something the other day that there's now more power generated in the United States from renewable energy than from coal, which is a pretty phenomenal turn of events. And what that says to me are two things. There is a fundamental reliability associated with these energy production methods that maybe wasn't as sort of embraced or assumed several years ago. And then I think it also says that for this type of energy production to scale up in such a way, there has to be a lot of cost efficiency that's been gained over the course of time. And so you could talk to people in your economics division at the University of Houston, but the cost per kilowatt of solar energy has dropped dramatically over the course of 10, 15 years, and really by orders of magnitude, the more investment that occurs into the space, the cost per kilowatt drops. So it's kind of a fascinating graph to look at. But I think there are real concerns around the costs of certain of these energy transition projects and who pays those, right? If it's an expensive project to undertake, to build, offshore wind, for example, at what point is that an economic burden that people, consumers, me and you, should have to pay or not, right? And maybe there's sort of a cross society analysis too of are these costs that are being passed through to people on an equal basis, and what kind of visibility do people have? What's the amount of transparency that they have over these kinds of choices that are being made? So these are important issues that require a good deal of focus, and hopefully some really smart legislators who can think through them for us.
So on the topic of the cost concerns you were just mentioning, ESG, or environmental social governance, present an opportunity for investors to prioritize their corporate accountability to the general public. However, there is some controversy regarding the practical function of the provisions. To give our listeners a frame of reference, how would you define ESG in your practice?
ESG has taken on great importance for a range of public companies in the U.S. and globally. Also, it's become really important with financial institutions that are making investments in private equity and mutual funds and hedge funds. So, I think we think of ESG really according to the E and the S and the G. Kind of our law firm's perspective, we have attorneys that are focused on environmental guidance for our clients, right? And so environmental law is obviously an area of law that's been around for decades, and law firms have dedicated resources to helping clients understand really critical environmental issues that their clients face. From a social perspective, there are new requirements that exist in exchanges for stocks, and also at the state level in certain places for there to be diverse boards that are governing public companies. That's a really critical issue that some of our public companies are addressing. And then also from a governance perspective, having transparent operations, having a transparent governance structure, that's also really critical for public companies that are charged with having first-class practices, having independent directors that sit on boards that are prepared to address decisions that might entail conflicts of interest for some of the non-independent directors. That's a pretty common issue that's faced. So I think law firms are also from an M&A practice perspective being asked more to perform an ESG type of due diligence function when a client wants to buy out another company. Lawyers are working with consultants in those exercises increasingly. Consultants have a different approach than a purely legal approach. They might have an analysis of, call it 130 different criteria where they're assessing the diversity of a company across its leadership ranks. They might be assessing, what are the environmental policies that exist at a company, what's their commitment to decarbonizing their energy resources, what are the commitments that they make, within the communities that they operate in. This becomes not a legal analysis in some ways. It's really more of sort of an operating standards type of analysis. And what that does is at the there aren't necessarily bad scores and good scores when that assessment is done in the connection of a merger acquisition, but it sets a baseline. In the same way that you might, before you buy a parcel of real estate or a business that has a lot of real estate, perform an environmental assessment to look to see if there are spills or underground tanks or problems. You set a baseline with your assessment, and you're then able to measure what are the improvements that occur over the course of the ownership of that real estate, in that real estate example. From an ESG perspective, how are you able to improve that business over the course of your time as an owner of it? And if you're a private equity buyer, that can be a really useful way to drive value of that business between the time you buy it and you sell it. Again, private equity buyers are often buying businesses that could have been family owned for a period of time, that don't have all of the corporate formalities or infrastructure that you'd expect of a public company. And so part of what they're doing is creating these better policies and a better managed business, and hopefully delivering value to that business over time. So that's another way that law firms and transactional lawyers are encountering ESG issues, is through this due diligence process.
And so what are the primary concerns with their impact on the energy transition?
Yeah, that's a good question, and I think a lot of people are asking, is just by virtue of being an energy transition business, is that somehow fulfilling ESG type of criteria, right? And I think the answer is no. I mean, I think an energy transition type business has to separately assess, what are the environmental standards that exist within its company, what are the commitments that it's making to governance practices, what are the commitments that it's making, from a social perspective to the community that it's operating within. And so, I think what is happening is that there are funds that are being raised around investing into businesses that are viewed as decarbonizing type businesses or energy transition businesses. It could be that if you have an energy transition type business, it's a more attractive company for raising capital right now because there have been all of these funds that are raised to try to invest in those kinds of companies. I would mention that in Texas, there are restrictions that the state comptroller has passed around investors of public pension funds discriminating against energy companies. And so, this has been a really hot topic, not just in Texas, but in other states, these anti-energy boycott laws. And so for financial institutions that are, working with pension funds and investing money on behalf of pension funds in Texas, there is now a prohibition on those kinds of asset managers discriminating against or screening off hydrocarbon companies as they are picking stocks to invest in. And so, I think just as relevant right now in the ESG discussion that you hear kind of percolating, it's not just, what are the ESG initiatives that exist at different companies, but it's, what are the anti-ESG initiatives that certain states are putting forth. And, Texas has been on the front line of that, over the past 12 months.
With all the funds that are targeting ESG, specific initiatives and companies that are looking to enhance their ESG practices and that they market themselves as such, is there any concern in the industry about companies that are, they say that their ESG best practices are one policy, but in reality and practically, they are not?
From a marketing perspective, what are the marketing materials that people that are trying to raise a private equity fund, or even for public companies, that are the subject of disclosure, what's the substance behind these claims that people have that they're decarbonizing their footprint, that they are engaged in these premier corporate governance standards. So I think there's a lot of scrutiny that exists right now on marketing materials that fundraisers are utilizing and greenwashing those materials and really lacking the substance to back up some of the claims.
Are there any issues for law firms to consider under ESG regulations and greenwashing in terms of their own liability?
Law firms are, I think, trying to address ESG issues from a number of standpoints. Number one, attracting talent is always a major priority that law firms have. And they want to be viewed as leaders on most of the kinds of issues that ESG initiatives address, from a diversity perspective, from a transparency perspective, and then from a social impact perspective. I'd say that, law firms in some cases have struggled with these kinds of issues over the course of time and struggle with them today. And so I think the ESG movement has caused law firms to re-examine, who they are, what are the policies that they have in place, and to think critically about how to improve their organizations. I believe that the ones that do the best job at that will be the best at recruiting new lawyers in the future and also retaining the people that are talented. In market cycles where there's a lot of competition for talent, lawyers vote with their feet and they go to places where they want to work that embody some of these, cultural objectives that are, really the kind of essence of the ESG movement.
So what would you say are the changes that may be needed in ESG regulations to address the greenwashing concerns?
There are a number of reporting obligations that exist associated with energy use. And today, those types of energy usage arrangements can be contractually achieved. And, there can be, instead of actually lowering the carbon emissions footprint of a business, there can be credits that are bought that effectively offset, carbon dioxide as an emission of the business. And so I think as a policy matter, the public has to determine and make a decision as to whether buying down your environmental impact is the right approach. Is buying carbon offsets the right way to, actually make your company more environmentally friendly? It achieves the objectives under some of these, ESG initiatives and decarbonization initiatives, but is that substantively how a company should be getting from, A to B? Transparency and disclosure are, always a work in process, but, what we are telling clients to do is to not overpromise and underdeliver. And so they have to really assess, what are the commitments they're prepared to make and stand behind and back up if, they're disclosing these things to people and not following through. So there's a real risk that too many promises are made by a client, and you have to be the counselor that helps them assess if this is something they're really ready to live by.
So given the importance of the IRA and ESG regulations in facilitating the energy transition through investment incentives and corporate accountability, lawyers have a truly unique opportunity to affect the shift from fossil fuels to low-carbon energy alternatives, especially by supporting their clients in the world in achieving the 2050 carbon neutral goals. How can lawyers become more involved in the energy transition and support these carbon neutral initiatives?
Well, that's a good question. I mean, I think it's not intuitive that lawyers have a role in this when we first think about it, because we're trying to help clients solve disputes, right? That's sort of the first thing people think of when they think of lawyers. There's a fight, and the lawyers are helping the client win or lose the fight. But once you look past that and you think about lawyers as transactional counsel, I think there is a role for it. Maybe it's the micro level lawyers to help clients reach deals that ultimately materialize into a facility that's built that generates electrons using the sun or using wind. And I think that most developers that are working with a lawyer to raise financing to build a facility, view the lawyers as part of the team and as a partner in what they're doing. And certainly, many lawyers wind up working in-house and, work with those developers, and they are partners. They own these businesses. There are also lawyers that Kay McCall, who I mentioned at the beginning, is a great example of this, who really leave their practice of law behind and become business owners and CEOs. I'm actually working with another lawyer right now who was in private practice for a number of years and then decided to become his own CEO and hire two colleagues who have different skill sets, engineering and finance, and he's getting a private equity commitment and going to try to develop a project. So lawyers have, I think, a unique skill set around risk assessment that we talked about at the beginning, and project development, in many ways is really assessing risk, being paid to take risk, and being prepared to monetize a business at the appropriate time. So I think there's a lot of ways lawyers can play a really significant role in the energy transition, beyond just settling fights, but there's going to be plenty of those too. So get ready for that.
Right. So as a final note, we are curious about your thoughts on clean energy developments as we creep closer to the 2030 benchmark on carbon emissions. What do you think is the most promising opportunity for our society to stay on track for the 2030 benchmark and eventually meet our 2050 goal?
Yeah, I think there's still a huge opportunity for electric vehicles to change the way people use energy. It could be just anecdotal, but there doesn't appear to be the same kind of acceleration of adoption of EVs that many envisioned several years ago. And it really could just fundamentally change the demand for fossil fuels, in the U.S. and in other places. And so I think if you asked people that are in the oil and gas business, what's their biggest fear around, the demand side of the equation, it would be an acceleration of the adoption of EVs. So that's one thing that would probably make a huge difference. Those that study, hydrogen markets and the potential that hydrogen has to replace other kinds of feedstock for industrial facilities think that is a huge decarbonization opportunity. From a power generation standpoint, we talked about how natural gas has displaced coal in a very substantial way over the course of time. I think a problem that could occur that many don't anticipate is that nuclear energy still, I think, generates something like 20% of the power in the United States. And no new facilities have been built in decades, really. And all of the facilities were built, starting in the 1970s. And they all have pretty much, 50 to 60 year life cycles. So, those are all zero carbon energy generating facilities. And the big question, I think, from a decarbonization perspective is how many of those megawatts are replaced by natural gas megawatts versus, solar or wind. It doesn't appear that as though any of them will be replaced by nuclear megawatts, which would all be zero carbon. So, these are also issues that exist in the these are all United States, issues, and decarbonization's not a U.S. issue. I mean, this is a global question. And so we have to think about, as a country, how much we want to align, influence, direct decarbonization strategies in other places where they may be ahead of us. In Europe and Asia, there have been just as aggressive, if not more aggressive, climate accords and decarbonization goals set. We have to figure out what is going to be our position.
These have been incredible insights here, Archie. This has truly been a pleasure, and we really appreciate you taking the time to discuss these developing issues with us.
Yeah, my pleasure. Thanks for having me, and congratulations on the amazing new facilities here at the UH College of Law. It's just a wonderful building, really impressive.
Thanks again, Archie. Really appreciate it.
Also, before we finish, since this is my final episode hosting Emphasis Added, I would like to thank you all for tuning in this season. Jake and Harrison are bringing a wealth of knowledge to the show, and Matt and I are really looking forward to see what they do in Season 5. But for now, this is your host, Brock Jones, signing off. Thanks for listening. Emphasis Added is a podcast by the Houston Law Review. If you like what you saw, check us out on YouTube or your favorite podcast app.
Follow us on Instagram @EmphasisAddedPod and check out the Law Review at HoustonLawReview.org.